Everybody, this is Ospreyeye from MyChartCoach.com, and we are looking at ticker symbol MRNS. Okay, today up 7%. MRNS is on a nice 5-day run. As you can see here, there was a bounce on the 12th off of the middle Bollinger Band, and then the candles have been riding EMA's 4, basically EMA 4 support higher. There's a strong uptrend on Friday. There was this close above the bottom of the gap level. So there was a close above that level that was signaling more upside potential. And then today there was a gap up open, and the share price started filling the gap, but then it has pulled back and it's formed a long upper wick on today's candle. Right, that shows profit taking, and now there's a small real candle body at the bottom of the candle, and so this is showing that there's profit taking, possibly shares being sold. The gap above the upper Bollinger Band signals that the chart is frothy, after this 5-day run, and the candles will likely work their way back into the bands. What bulls want to see is they want to see the bottom of the gap turn into support, so they want to turn the red line green, and if that holds, the target's going to be the 50-day moving average at 333. That'll be the next level to break, and then if it does break, that's going to put the top of the gap on deck up here. If you can get through the 100-day moving average, and then it's the top of the gap in 200-day moving average. That's on down the road, but this is starting to fill the gap, and that's what bulls want to see. This is a high wave. If there was not this small lower wick right here, this could be a bear shooting star pattern. So this is really not the bulls did not want to see a pullback like this. It is on lighter volume, which is good. It's a fraction of the volume from Friday, so that means that there's still people holding from over the weekend. As you can see, this is the chart that we posted back on the 6th, July 6th, when MRNS broke EMA's 4 and 8, EMA's 4 resistance, and also broke EMA 8 on that day. As you can see, EMA 4 was the resistance level on the way down, and then once it broke that level and closed above, it was a signal the chart was heating up. The chart pulled back, found support, and then has been running ever since for the last 5 days. It looks like it could be cooling down here. Take a look at the 15-minute chart, and you'll see today the candles continued riding the middle Bollinger Band. As you can see, look at the tight Bollinger Bands back here before the uptrend started, and then this was telling you that the move was imminent. It was either going to head north or head south, depending on which way the candles formed, above the middle Bollinger Band or below. Candles started forming above the middle Bollinger Band, signaling there was upside potential. Finished strong yesterday, and then on Friday, and then today there was this big run up to 265, but a pullback has followed. Now at 1:30 today, the middle Bollinger Band broke. You can see this red candle here. Now that's signaling downside risk. Bulls do not want a close below the middle Bollinger Band today. That could signal that the share price may pull back. Okay, the key level to hold on this chart is the 50-day moving average. If you've sold up here and now you're looking to reload, the strategy is to wait for the candles to break the middle Bollinger Band before taking the next position. You want to look and see that a new uptrend is starting. This is starting a new downtrend on the 15-minute chart. If you see here, there was a PSAR bear flip at 11:45. Notice how the green dots flipped above the candles. That was a signal that the trend was changing, that the uptrend was stopping, and that and reversed, and a new downtrend was starting. As you can see too, look at the climax spike. Notice this long upper wick correlates with the big green volume bar. That's a signal that people sold shares at the top. Possibly the company dumped some shares, and so that was followed by a red candle and a red volume spike. So that's usually a sign that the share price is going to pull back. So always look for a climax spike to signal the top of a run. Okay, key is to hold the 50-day moving average. If it breaks, the 100-day moving average will be on deck. A new uptrend will not begin until the middle Bollinger Band turns into support. Okay, thank you for viewing this chart. Check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Thank you.